So, hi everyone. So, welcome again. And I want to speak on the happenings, what happens after you get your approval. So, number one, you receive your max mortgage amount that was based on your income and your credit and your debt. Then, again, you usually get a rate hold for 90 to 120 days. Then, after this, you can start house hunting confidently. So, you will need a final approval once you make an offer. So this will enable the lender to check your property details, your updated documents, and probably appraiser sometimes. So take note that pre-approval is not a guarantee. It is based on your information at that time. So during your pre-approval period, kindly avoid big financial changes before closing your approval. Um, Another part I want to touch before I go fully to what it entails to house hunt and what you should know is the fixed versus the variable rate mortgages in Canada. So fixed rate mortgage. With your fixed rate mortgage, your interest rate stays the same for the entire term of your mortgage. So your monthly payment stays the same. The popular terms for this is always one between 1 to 5 years, with 5 years fixed being the most common. So what's the advantage of this? The advantage of this fixed rate is that um predict you can make predictable payments and it's very easy for budgeting. You are protected from interest rate increase. It's also good for people that are conservative buyers or first time buyers that don't want to take risks. So what's the disadvantage? Because everything that has an advantage has disadvantage. So higher starting rates than variable, like you can have higher rates. It's costly penalties if you break the mortgage early can be in thousand, and I will explain this. So if you break a fixed rate mortgage early, like for example, maybe you sell your home or you want to refinance or you divorced if you were co-applicant or job relocation, the penalty can be very expensive. So the bank will have to calculate the penalty using the interest rate differential method, which can be in thousands or tens of thousands. So many people don't plan to break their mortgage, but statistics have it that about 60% of Canadians do break their mortgage before the full term ends. So a similarly protective pro tip that I would give would be you choose a shorter term, as maybe between 1 to 3 years, so 5 years. You can ask your mortgage lenders about fixed rate mortgage with lower penalties. Some non-bank lenders also offer this too. So quickly, I will also touch on the variable rate mortgage. So with the variable rate mortgage, your interest rate goes up and down based on the Bank of Canada policy rate. So payment may stay the same with may stay the same, but more but may go up to interest if the rate rises, right? So the advantage of having a variable interest rates would be usually you start lower than the fixed rate, historically lower over long term, and it is cheaper to break. So penalties are usually 3 months credit, like no higher cost of penalty if you break those terms. So the disadvantage of having a variable rate would be the risks of rate interest, so it can go up and down. Then it is less predictable for budgeting and it can be stressful if rates quickly rises. So there's another one they call the hybrid, like fixed rate or and variable rate altogether. I really don't know much about that. Hopefully in the next video I'll talk about house hunting, what you could look out for to get the best when you are house hunting. So till then, Hope you keep making wise choices, especially for first home buyers, as you plan to get your home in Canada. Till next time, take care. Bye bye.